What is going on, everybody? And in this video, we're providing you a state of the market in stock picks for March 22, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, tomorrow is going to be quite interesting. We are continuing to run. Now, tomorrow we do have Powell. We do have monetary policy, essentially, which they are pretty much pricing in a 25-point basis move. Essentially, the odds of a pause are about 14%. Now, the Fed have essentially gone off this projection for, I believe it's like 40 plus years. So it is pretty accurate. So to deter from that is highly unlikely. Considering that a lot of quantitative easing that has been done over the past year, and something I've talked about, is essentially been erased. 50% of the quantitative easing that we've been pushing hard has been erased over the past week, with all this money being shilled out towards banks. Now, I don't know if this is 100% a backstop, as Yellen has essentially said that Powell, the Fed, and the FDIC will pretty much be selective on who they pick to essentially be bailed out, right? And so, with that being said, I mean, you can say that that would be a smart idea because there are critical banks that just can't go under. But the problem being is there's been a lot of talk about other smaller banks, small and mid-sized banks that they would like the same protection. And then you have articles coming out essentially saying that they are looking for ways to back the mid to smaller banks, which is interesting nonetheless, because if we've already in a week erased 50% of the quantitative tightening that Powell has done, what happens next? You're essentially in a rock and a hard place, because you do not really have a middleman that you can essentially absorb that cost or that blow to drive down inflation. Something I talked about is it could come from the banks. It needs some more banks to essentially break and fail for more easing. And I think if they come in at a 25-point basis move, I think that could really do the trick. I think that would be the one move that would hammer a lot of these companies. Now, you have to understand, a lot of these banks, they gave out a lot of loans during essentially a time when rates were almost close to zero, right? And so, with that being said, now with this quantitative tightening, it is tightened historically fast, and in doing so, you're putting a ton of banks underwater. But with that being said, you're backing the big banks, even though they are underwater as well, in hopes that they can hold more deposits so that they can come up with a more extravagant or more lucrative bank percentage for essentially holding your deposits. And they can't really do that right now. And so that's why you're seeing also a lot of bank runs and everything else that is currently going on in this bank crisis. So we see tomorrow is going to be a big day. Like I said, the dynamic of the market is different now. It's changed. We've erased essentially 6 months of Powell's work, and we are right back on the clock. The question is where are we going to go from here? Inflation is still at 6%. So it is still very high. But again, I think that could be undone very quickly with a couple more banks being crushed. And I think the next move by Powell, I'm heavily going with the 25-point basis move. 50 is, I think, at this point off the table. I would 100% agree 50 was off the table, because then you start potentially taking the big five out at that point. If you start taking big five banks out, you're dealing with critical banks that have been essentially identified as being critical and important banks. And if they go under, right, that's going to rip out or destroy your whole infrastructure in the banking system. This is why Credit Suisse was saved, because it would have affected the global banking system, which will in turn affect us. And so we have to understand that is if one system goes down, it's going to affect us. And so we have to understand that. And so the U.S. was actually contemplating on stepping in, but people didn't want the U.S. taking over the Swiss bank. So with that being said, again, we are in a very interesting spot right now. We are jumping, and I know some people are saying it's quantitative easing, but there's a problem with that. You can't expect that we're going to go right back into a bull market. That's just not possible without inflation running, right? You have to understand that the quantitative easing, I believe, is a backstop for a 25-point basis move about ready to essentially break a bunch of banks. And when that happens, that's going to put us into full-on recession, and that's going to put a lot more people out of work. It's going to do a lot of other things. It's going to have a lot of other side effects that essentially is going to cause us to actually start laying off rates. A real quantitative easing, I don't think will need to be applied. I think this is more so just a backstop to help the next move that's about ready to happen with the 25-point basis move. And then that being said, as soon as that takes effect, we're going to start seeing more banks crack and break, right? Just you have to understand, again, looking back at what bonds are compared to the rates, just a full percentage point is 10% on a bond. And so if they bought a bunch of bonds cheaply during when rates were nothing, they're taking a huge hit on just a quarter point percentage on these bonds. It's putting them even more underwater. And so this is what happened to SVB. And a lot of banks are in the same situation. JPM is not any better, but it is a very critical bank. We can't lose JPM, because if we do, that's the whole system. And so this is why this quote unquote backstop is put in place, because they're prepared for the next move and what's going to happen. If they went to a 50-point basis move, again, you would be risking a big five bank. You'd be risking a critical bank, and you don't want to do that. And you have multiple critical banks at that particular point. So if you do 25, that'd be enough to wipe out a good chunk of banks. And we're going to see that, and that may take a couple weeks to play out. You have to see. But we will see, and I think we're very close. Like I said, we're in the final stage. However long that's going to take is really going to depend. The Fed, again, have 2 months before the next monetary policy. They can't just not increase it and then in hopes that everything just fixes itself. I think they're trying to at least accelerate what is already currently happening, and then you get your deflation. Yeah, there's some things that come at a cost, but you get your deflation. You get a lot of these other things. So to believe this is going to turn right back around and we'll go back to all-time highs, I think you would have to be really delusional. How much further can we kick the can and assume that this thing isn't bad? People have no money. That is obvious, right? The average consumer hasn't been in this game for a while. We have to understand that. And so right now, the best thing the Fed can do is break the banks. However that entails, right? That's going to be a lot of failures going on. And another 25-point basis move, I think, would be enough to do that, cause disinflation, and cause us to stop start cutting rates and actually doing quantitative easing, which could flush the market, right? That's the move we were waiting for, and essentially how 2008 played out. Once they started doing actual quantitative easing, everything crashed at that point. And so that's kind of what we're looking for. That's kind of what I've been looking for, is waiting for that quantitative easing moment that would essentially crash the market. So again, we have to see. Tomorrow will be big. We can go over the charts and look at some levels, but the big thing here is it's not going to matter because of what happens tomorrow. Again, they're predicting a 25-point basis move. I'm expecting a 25-point basis move. Again, anything more than that would be straight out of the blue, and you would straight be looking just to absolutely obliterate the market at that point. And again, a pause is highly unlikely as well. It's only down to like 17% now, like I said, but you can't just pause. You need to kind of rip the Band-Aid off, and I think by going to 25-point basis move, you would do that, and you would cause essentially a cascading effect that's going to affect the banks. So the next 2 months, you're going to be aware that stuff is going to happen. And then if you need to do emergency rate cuts, that would be the time to do it. So, and then we have to understand too that going into tomorrow, we'll get monetary policy at 2 p.m. Eastern Standard Time. You'll get Powell at 2:30. You also get new projections. You have to understand, with the change in the dynamic of the market, the predictions and everything on what's going to happen are going to change a lot, especially if it's only 25, and whatever they start talking about, if they start projecting, okay, we're actually start making cuts this year. Remember, that was completely priced out of this year at one point. Now the market has changed. This is why I talk about the market segment has changed now, because you're starting to break banks. So that's changed the dynamic of everything. So now you could potentially see a 25, or potentially see rate cuts this year, because you started breaking stuff. And this is, again, what we were looking for the whole time, was something to break. And we found it. Now we're going to add 25 points more, see which actual banks go under. Again, we don't want to go too fast in this situation. So I could see potentially 225 more basis moves to the original moves, and then see what banks survive after this one, and see if it's another one is necessary. So kind of what I'm thinking is they've already predicted this in essentially when Powell was saying that this is actually kind of funny. This could be tinfoil as well, but you think about Powell and the way they projected these 25-point basis moves, and he was talking about disinflation. Maybe they were already seeing cracks in the bank and other smaller banks, and so they thought they were in a good shape. 25-point basis moves. Maybe the last one isn't necessary. We'll see what banks do after a 25-point basis move. Let's see how many banks we lose. See where the Fed steps. Again, if this is played right, again, none of this is great, right? I mean, there's always going to be damage when it comes to what's going on when you're messing with the monetary policy, right, and people's livelihood and everything. But these cycles are necessary. But nonetheless, we'll see what happens with this 25-point basis move and what breaks. And then I think it could cause, if a lot of banks, I think at this point, you probably have a good number of banks break. And then that would cause essentially a cascading effect that could cause disinflation quite rapidly and help out our current situation and kind of reset the clock. Yeah, we take a crash, but we could actually pivot from that point. And so, and that is what's necessary. That's what I've been looking for this whole time, is for that point. So with that being said, let's go ahead and look at the charts real quick and kind of see what we have. Again, tomorrow's really not going to matter. Once Powell speaks, then that's going to ultimately be the direction we go. Again, if he pauses, the market might actually run from that. I think the market would kind of not really know what to do if that happens, but you can almost guarantee if he goes a 50-point basis move, the market's going to crash, because a lot of banks will get crushed, and they know that. And I think that's why they're only doing 25 increments, just to see what banks die off slowly. But we'll see. Again, this is all just a theory I have to see how this does play out. But we do have a hard ceiling roughly around here, around the 40-20. We've seen this ceiling a couple different times. We've been rejected off it. We've blown through it, come back and retested it. Now we're kind of retesting it, kind of setting up for tomorrow. So I expect us to play this range, kind of this daily candle we had today. I wouldn't actually be surprised if we head back down to 39.67 tomorrow to find out and see what happens with Powell from that point. I think then we would determine if we break up or down tomorrow. Again, tomorrow will be a huge move. I think either way we go. So that's why I think everything is almost combed through with a fine tooth comb, because what happens tomorrow is going to be very strategic, and it has to happen that way. You can't go 50 because you're going to blow everything out of the water. You can't not raise anything because you found you found it, right? Like you found the one string that's going to unravel everything. You need to keep pulling it just a little bit more for everything to just bust. So that's kind of what we're dealing with right now. So we could do 25. That would be enough to start kind of easing some of this inflation and everything else, get rid of some banks that aren't necessary, and then go from there. So again, we'll see what happens here, but I think that's pretty much what the scenario is there. Again, if we start flushing, I mean, who knows, right? You definitely want the market to digest what's going on. You're going to get some fake moves on what's going on. Again, if it's a pause, people may not know how to take that. Like, okay, well, things aren't really bad. Why are you pausing? But it may be enough for it to break banks, but it'll be a much slower pace. So if it goes 25, at least it'll have speeded up just enough to hopefully just start taking out some of the smaller banks, and then we'll go from there. But we'll see. We'll see from there. The dollar slowly cratering here. Again, to see the detachment from the market, or the market running, and the dollar kind of detaching from that. I think you're going to see more of that. If the banks start crashing, the dollar will start coming down more. So we have to see how that does play out, but ultimately that's what we're looking for here. So it may rip up, it may rip down. It really just depends, again, what happens tomorrow. Have to wait and see. But ultimately, if we start getting bank failures, that could be a strong possibility, because you're changing the amount of money that's currently being in the system, which was a problem before. And so just keep that in mind, that this is essentially a hard reset. This is what a hard reset looks like in the banking system. So it's definitely much needed, even though it's not pretty. But nonetheless, Bitcoin, we'll see where it goes from here. Again, if you really want Bitcoin to be its own thing, it's going to need to survive whatever happens here. If the banks start to fail a lot and crypto stands alone, then maybe it's actually something that you could look at as being, it's actually decoupled. I think it's still a ways from decoupling, but again, time will tell. We'll look and see if that's true or not, but again, we will see from here moving forward. So tomorrow is going to be that day that's going to start it. So Tesla, massive rip. It had some news yesterday. So there was a massive rip out of here because there was a big news about essentially them being upgraded from junk to I don't know what the new level is, but Moody's actually increased their status, and so that was a big plus for Tesla today. So that was a win, and they pretty much rocketed today because of that news. Aside from that, it really wasn't doing much. I think Tesla's a great company, but we need to thing needs to die out a little bit more. Again, the numbers and everything that are going to come, what's about ready to come, I think are going to be nasty. There's not going to be anything really nice about it. We are getting into earnings mode here just around the corner, so keep that in mind. At some point, whether that breakaway is at some point, but you have to understand the market will sell before it actually happens. So we still got about 3 more weeks or so before that starts to kick off. So we'll go from there, and then we'll get the banks on top of it. So I'm sure we're going to see some pretty numbers there. Nvidia had its, I don't know if it was Investor Day. I think it was Investor Day today, but nonetheless, it looks like it wants to keep rolling. Again, chips are very, very strong because of the ChatGPT and AI. It's painting a very bright picture what's going to happen. But again, we'll see. We'll see what happens tomorrow. I think, again, if the general market sentiment is down, this is going to be pulled right with it. And then it's got some huge gaps to fill, so just keep that in mind. But we'll go from there when we'll cross that road when it gets here, right? So we'll see. BA, again, really just kind of chop fest, just like the markets. We have to see. Could be a break, a retest, and then drop. Again, it's got a lot of support. So bulls, you need this to break over essentially 209. Bears, you need this to have a clean break underneath 195 and start selling. Again, it has a lot of support, so it's not like you can just this thing is just going to sink again, and unless the market sentiment is different, right? If there is panic, we just start selling, then that's something different. JPM, it's holding on and actually gapped up today, which is crazy. It's still holding essentially roughly that 129 to the 133 mark. Needs to definitely hold this. If not, if it rolls over, it could get pretty nasty. Again, this is the only bank that really hasn't corrected this or taken this back And to be able to do that, it needs to at least hit 117. It will at some point. Whether that's tomorrow, I don't know. We'll definitely find out tomorrow, as Powell will essentially set the direction of and the pace of which everything goes. Yeah, again, you have to understand banks lead the way. So even though tech and everything is so much strong, eventually they're going to follow right behind. And if banks continue to go down, that just means there's more, essentially, that tech is going to have to catch up and could get pretty nasty. And so, again, that kind of plays into the whole thesis of bank crises and everything that's going on. But we'll wait and we'll see. Again, from this point, so Goldman Sachs, again, it's corrected. So at this point, Goldman Sachs, in my opinion, is in a much better spot here. But again, if we get tons of bank failures, it's not really going to matter. This thing will continue to sell. So even though it has strong support here, roughly around the 285, again, this could easily break and it could dip down even lower than that. But we'll see. We'll see what happens. Bank of America, same thing. It broke support. It's barely holding up. We'll see if this thing rolls over and starts selling off again. But yeah, that's pretty much it. I don't want to make these videos too long because I know I've been making them like almost 30 minutes out of whack. There's just a lot of information going on. And normally these videos are longer when there's more information to disclose. So with that being said, it all starts at 2 p.m. Eastern Standard Time tomorrow. Get ready for that. And then from that point, we'll go and we'll see what happens. But, it's, if we go up, we go up. If we go down, we go down. I think it's just best to focus on what's in front of us right now and then let it play out. If this thing really isn't going to buckle and sell off, which everything is pointing to, then let it buckle and sell off. If it wants to push, I would be very careful in that sense. And, if you're just going to play calls until this thing dies out or whatever the case is, just whatever you do, whatever your plan is, again, just make sure that you have risk management in place, and that is what's important. So nonetheless, I will end it there. I'll quit my jibber jabber, and until next time, I'll see you guys later.